10-year note treasury yields moving higher, seeing a big move back to 160, almost erasing the entire move we've seen over the last 4 or 5 sessions, taking us from 160 down to close to 140. We reversed a little bit yesterday, and we continue to do so today, seeing a big move higher in treasury yields. Again, a lot of this stemming from the inflation numbers. We got PPI stronger than expected yesterday. Today we get CPI, its highest since 1990. A lot of that pushing yields higher. Higher inflation translates into higher yields as the possibility of a more hawkish central bank, which we have yet to see. We've heard from the Fed, obviously, earlier this month about tapering, and they will begin their tapering process, but that didn't seem to have an immediate effect on treasuries. Actually pushed treasury yields lower in the days following the November FOMC, but now seeing a big move higher in the wake of not only inflation, but sort of a mediocre auction today. Earlier this week, we had a 3- and 10-year auction that went pretty well. Today's 30-year auction, not so well, tailed by about 5 basis points. We saw yields across the board move higher. 10-year note was the same. We saw it moving all the way up, again, close to 160, almost fully erasing the move that we've seen over the last several sessions. Now, today's range, if you take it in perspective, was the 4th widest range that we've seen on yield basis of the year. So it was a pretty big range. We opened up, we shot yields straight higher after CPI, and they continued to go higher. So the 13 basis points and change that we saw today, again, highest since June, the 4th highest range, widest range that we've seen all year. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you will notice that volatility since the early part of September has been trending higher since just before the September FOMC meeting, and it continued despite the fact that we've seen yields moving up and down. Typically, we talk about yields and volatility relationship. The higher yields go, the higher vol goes, and vice versa. That has not been the case over the last week or so. We've seen yields declining with volatility going higher. And again, as yields moved higher today, we saw volatility going higher as well. So it'll be interesting to see if we continue to see this extension higher, does volatility go higher? And if we pull back, does it again continue higher? The market obviously seeing something that maybe isn't written in the tea leaves, and right now we continue to see volatility going higher despite the direction of yields in the 10-year note. Lastly, let's talk about inflation. This is really the catalyst for what we've seen here over the last, call it 12 hours, the move that we've seen starting with PPI and today with CPI. The Fed has been telling us for quite some time now that inflation is transitory, meaning it's here now, but it'll be gone shortly once everything gets back up and running. And the market may have believed that. We saw equities coming off today. We saw yields rising. We saw gold prices higher. We saw the dollar shooting higher. Expectations for the first rate hike have shifted from early parts of 2023 to now the middle part of 2022. So a much more hawkish Fed expected. Now, none of that has happened yet, clearly, and time will tell. But right now, the inflation component of the Fed's argument is starting to lose a little bit of its credibility. It'll be interesting to see if the Fed gets in front of this. Will they come out and talk about it? Maybe inflation isn't so transitory. We did hear a few Fed speakers talk about that, but didn't hear that from Mr. Powell himself. And treasury yields now reflecting a much higher level of volatility as we see price swings and yield swings coming in at none like we've seen in quite some time. Clearly, as I mentioned earlier, the range today, the 4th highest of the year. So taking a step back, looking at yields. Earlier, about a week and a half ago, we were trading at 160, got all the way down to 140. Today, we got all the way back up to 160. So some crazy days trading in 10-year note area, ending the day at about 155. We have a U.S. holiday tomorrow. Not a whole lot of news this week, but clearly next week we'll be listening to our Fed speakers. We have retail sales and a lot more that'll give us a much clearer picture of where this economy is going. And again, keeping an eye on those inflation data and the numbers.